This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. There's a few things going on this week, right? Monday, QT is supposed to be ending. Then on Tuesday, we got the FOMC rate cuts. Wednesday, apparently the Fed's going to print 1.5 trillion. However, I can't find a source for this, and I think this is fake news, okay? So just keep that in mind. Thursday, we're apparently getting a US-China deal of sorts, okay? Or a fallout, indeed. Could be a fallout, right? And maybe everything's going to crash because of big tariffs again. Friday, we got the S&P 500 earnings, where on this channel, we've been talking about how we're probably going to beat earnings for a while, and investors are going to use that as an excuse to justify us being early stages of a bull market. They're going to keep looking over the hill at incoming rate cuts and liquidity and a potential China trade deal, and then see earnings beats and conclude that we are indeed early in a bull market, right? That we have indeed got a soft landing. Before Saturday, we've got some sort of tariff deadline. And the question was, could I talk about all of this in an upcoming video? And I just said, look, cycles are in control, everything else is narrative. Fair enough, right? Not sure what else you expected to hear. And it's absolutely true, right? This is the hilarious thing about this channel, is we really don't need to know anything hardly. Okay, we need to know how to count time. We need to know how to manage risk. Okay, we need to know how to wait patiently for confirmation and quality setups. But realistically, this stuff I submit to you is for the rest of investors and traders out there to worry about and concern themselves with. Many of these traders and investors out there will be more than glad to debate me for hours and hours on end about how QT ending is super important, right? Or how these rate cuts are super bullish, or how the Fed is indeed about to print money at all-time highs and blah, 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 blah. But remember, okay, I do not care. Cycles are in control, everything else is narrative, and if you disagree with that, this is probably just not the channel for you, okay? On this channel, it really is as simple as this, right? 4-year cycle. No, the 4-year cycle's dead. There's an infinite demand and liquidity. It's never going down again. Insert narrative here, right? Measured the incorrect way from low to high, blah, 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 blah. I don't care, okay? Because the 4-year cycle is still fully in control. And I know a lot of people, again, measure this thing incorrectly. I know a lot of people have decided to have the 4-year cycle as their base case all the way up until we're due to peak, and now suddenly they've abandoned ship on this idea. I suggest to you, we can still see daily cycle lows chaining together to give weekly cycles. We can still see weekly cycles chaining together to give 4-year cycle lows, and thus I think it's absolutely ludicrous to say there's not going to be a 4-year cycle, but to each their own, right? In case you didn't know, we also have a 4-year cycle in the S&P 500, which inverted out of 2022, meaning all of the lows are synced up to occur late next year now. Okay, and gold has an 8-year cycle, which is due a half cycle low year 4, also synced up. So if we actually do get a big bear market, a global recession, a huge kind of red year next year, okay, a big deflationary event like we've been calling for on this channel, it's going to have been really obvious to anyone with any degree of cycle knowledge at all, right? Anyone that has watched the 17-minute tutorial on my channel in the playlist section, anyone that has bought the PDF, or indeed a bunch of you got given it for free in the last live stream when we did the 35k subs celebration. I gave away like £2,500 worth of PDFs. Pretty much anyone that asked for one got one. So anyone that's read that, anyone that has access to the indicator and all the educational content material on the website, anyone that has watched the free 17-minute tutorial knows the rules. It's not that complicated, right? We are well on our way now to finding a top in this major 4-year cycle and making some declines across the board. At the same time, the Dixie, again, it's in the charts. It's really obvious in hindsight. When we play out into the future and we get a big red year next year and everyone's scratching their head going, what about ISM, or what about up only, what about a 5-year cycle? Oh, I don't get it. It's been blatantly obvious the whole time. All of these cycles are synced up. This here is the Dixie. It's getting ready for a fake breakdown, an inverted 3-year cycle, and a big deflationary rally. Of course, there's invalidations for all of these setups, but so far, we can't even entertain invalidation because it looks nothing like any of this is getting invalidated. With every day that passes, it looks more and more likely for a number of reasons, okay? First of all, Bitcoin is in the middle of distributing, right? Only has 2 more weekly cycles until its 4-year cycle is due. And so in the best case scenario, okay, it has a pop here to a left translation, end of the year, maybe very early January, and then it has to start its declining portion. At the same time, the stock market is going vertical at the moment, absolutely vertical. So how do you think this ends, right? Like this? By going up only forever? Of course not. It's going to end, like all parabolas do, spectacularly to the downside. Here's the hyperwave chart, right? How do you think this ends? Exactly like this. And at the same time, gold may well have already completed a parabola and is already starting to correct into its major half cycle low in its 8-year cycle. Again, all at a time as it's in the charts once more that we're about to find a 3-year cycle low for the Dixie, inverted halfway along, and then have this big deflationary rally. The inversion is not something I'd normally bet on for a yearly cycle, but it's the only way I can make it fit knowing that we're going to get deflation next year. So do we need to worry about any of this? You can if you want, okay, but I'm not going to. Again, cycles in control. Everything else is indeed narrative. Now, I also wanted to pull this chart up and, again, further illustrate this point that I think we're still on the right side of the trade here, okay? It's never about being right or wrong. It's about staying on the right side of the trade. I've proved this time and time again. I've been wrong plenty of times and still made money, and I've been right plenty of times and not acted on the trade setup. Right, so I've been right and not made money, and I've been wrong and still made money, proving that there is no value in I told you so. It's not about being right or wrong. It's simply about staying on the right side of the trade. Now, with that in mind, for some reason, a lot of people have really got a personal vendetta against this guy, and whenever I show his charts, I notice a very common pattern here. Often people are quick to critique or criticize Henrik, but they never have a counter to his argument here. Okay, so how about we do not make this personal, okay? We approach this as professionals. We say it's business, not personal here. And instead of trying to say, oh, Henrik is X, Y, and Z, okay? Try to pick apart this argument. Unemployment at the top in this kind of red or burgundy color, inverted, of course. Looks like it's rolling over, doesn't it? Looks like anyone that says this is not rolling over, frankly, is just wrong. This is clearly rounding and it's clearly on its way this way, okay? Now, it can change quickly, but it hasn't got a trend line breakout and it hasn't changed yet. Now, all prior times, look, okay? Look. Recession in every single occasion. Consumer confidence as well, showing the exact same thing in every prior instance of recession. What have we got at the hard right edge? Consumer confidence in blue, looking recessionary, showing no signs of any repairs here, okay? As unemployment inverted is also rolling over. Now down the bottom, we've got monetary conditions, okay? Positive values here have historically been associated with tighter than average financial conditions, whilst negative values have been historically associated with looser than average financial conditions. And at the moment, we're already pretty loose, which note, okay, all prior recessions started with relatively loose conditions. So again, I know it's very easy to just say, well, this person is X, Y, and Z, okay? But how about instead, you look at this and say, hey, Camel, here's why this is flawed, right? You can't do it because it's not flawed, right? This is exactly what's in play. This is rolling over. And where is it rolling over? Right at the top of the bull phase of all of these major 4-year cycles, okay? Right as the Dixie is about to invert its 3-year cycle low as it moves towards deflation, right as the market is still jumping up and down screaming rate cuts are bullish, liquidity's coming, earnings are beaten, there's no chance of a recession, there's a 5-year cycle. It's a wild time, but frankly, this is actually really good. The more sentiment keeps skewing this way, the more dogma and ignorance I see pertaining to these cycles, the more confident I feel that I'm on the right side of the trade again. Remember, it's at the inflection points when it pays to be contrarian. And something else that gives me even more confidence, like I said, is you show something like this, and the only way people critique this is instead of take apart the argument, okay, instead of pick apart this whole chart and say, well, this is wrong, or here's why it's wrong, instead they just go, this person is XYZ, right? Childish name calling, because you don't have a case. Right? What you have is like a personal vendetta and some toxicity. Liquidity is not driving the business cycle. We've debunked this time and time again, with liquidity increasing the entire time through many of these recessions. Liquidity cannot prevent market crashes or recessions. It cannot prevent things like yen carry trade unwinds. It cannot prevent gross deleveraging, especially given that we have built a quadrillion of notional derivatives on top of this mess since the last crisis in 2008. Now, in the short term, that doesn't mean we can't still be bullish, doesn't mean we can't still be long. I'm actually extraordinarily bullish going into the end of the year, as I've been saying over and over again every single day. But I'm also a cycle trader that knows exactly where we are in these major long-term cycles, and the writing is going to be on the wall. When we look back, okay, we're not going to have a chance at saying nobody could have seen this coming. This is one of the most obvious trades of my career at the moment, and I'm just really, really grateful that for some reason very few people also think it's obvious, which is good. That tells me I'm going to continue to be correct in this assumption. Here's Bitcoin versus the NASDAQ, okay? All prior times when the NASDAQ outpaced Bitcoin, Bitcoin had a catch-up trade, suggesting that what is coming next for Bitcoin is that final leg into the upside. Again, we've been talking about this over and over and over again, and when we get to the charts in a minute, I'll show you exactly what I'm thinking for Bitcoin. This is also very nice, okay? At the bottom here, we have got a 100-week SMA. And you'll notice whenever historically this 100-week SMA reaches the level of the prior all-time high, we get just 2 monthly candles into an ultimate top for Bitcoin. It's the same deal here. Once the SMA 100-week reaches the level of the prior all-time high, we get 2 big green monthly candles, okay? And that's it. It's over. We've reached the top. Exactly the same deal here. Next month, it should reach the 2021 top level of about 69K. Tells us there's 2 months left until the macro top. which again would put the top sometime around December or perhaps even January, telling me at least to be open to seeing something like this, okay, for that grand finale move into the final high for Bitcoin. Again, I've been pounding my fist on the table and maintaining I cannot be bearish yet until I've at least found a weekly cycle low, set it as invalidation, and then seen what happens out of that weekly cycle low. And I'm still saying the exact same things, right? That's what we do on this channel. We repeat ourselves over and over and over again until even I am sick of my own voice. One final thing before we move on, just in case you missed it from the weekend's deep dive, there will be no inflation report released next month, okay? So is that fine? I don't know. I don't think so personally. I don't think they want people to know how far behind the curve they are, okay? That's what I think. Just like they don't want people to know how bad the jobs data is and how recessionary everything else like manufacturing and blah, blah, blah. I think they want people to be really, really blindsided and psyoped by the idea that this is early stages in a bull market, as if we have not been going parabolic since the 82 range break, okay? So if you want to believe this is early stages in a secular bull market, that is entirely your prerogative, but I think you are drinking the wrong Kool-Aid personally. Moving over to the S&P 500, okay? Again, a high confluence low in place, continuing to melt up, continuing to reset cycles without any more than a couple of percent, 2-3% at the most. And that's because we're in the final innings of a blow off top. This is extraordinarily rare to be resetting cycles with just 2 or 3% downside. And it's also extraordinarily rare to be resetting them in just one big red candle. Okay. But that's because this is extraordinary conditions for the markets, right? This is the final blow off top moment before we have an enormous bear market global recession and a short period of asset price deflation next year. Of course, all the while whilst we're heading down for that major 4-year cycle low. If you haven't got this indicator yet, then you have to try it for free, right? You've got to try this indicator for free because it will make you a far better trader, especially if you're newer to cycles, especially if you haven't learned all the rules and all that kind of thing. This thing will find you tradable lows all the way up. And on Friday, we are going to be running a discount code for the indicator. So if you want to get hold of that, make sure you tune in on Friday's episode. Meanwhile, gold working on some kind of breakdown here. So we'll see what happens over the coming couple of days. Silver as well into trendline support here, isn't it? So again, we'll see what happens over the coming couple of days. Bitcoin getting a little bit of a counter trend pop here. I see a lot of tape slaves getting kind of annoyed about this for some reason. I consistently am saying the exact same thing as I've been saying for weeks now, okay? We may or may not see a final rollover into the end of the month. We could also be bottomed right here, right now because of that 106-day cycle count, okay? So it could easily be bottomed here or it could easily roll over and print one final low. Either way, it doesn't really change much, okay? The yellow squiggle's still in play. We're either doing it from here, right now, or like I said, there's one final lower low into the end of the month, and then we'll do it from there. We also know for sure, okay, that we are just 2 weekly cycle lows away from finding ourselves a 4-year cycle low, aren't we? Okay, and thus we can say with an extraordinarily high degree of confidence here that this current weekly cycle is going to left translate. The only real question is, does it left translate at new all-time highs, like this yellow squiggle suggests, or are we going to left translate here with a lackluster rollover, something more like this, okay? And then this whole thing would indeed have been that sneaky institutional rollover and top. Now, I don't think anyone in their right mind can complain about the performance because off of the lows from about 15K to the ultimate high, assuming that was the high, we did nearly 700%, okay? Now, I know a lot of people feel like the market owes them something. They feel entitled, like the market owed them 100x returns, okay? But it's a market, right? It owes you nothing. You're not entitled to anything here. And 700% nearly from low to high in 3 years is extraordinarily good performance in my humble opinion. So if it has topped right here, right now, I really don't think anyone in their right mind can say that this was a lackluster bull run. I think all they can really say is they did not manage their own expectations. And particularly if this yellow squiggle turns out to be right, whether I have to shove it to here or here doesn't really make a difference to me. But if this yellow squiggle is correct and we're going to get somewhere between 150 and 200k, then we'll be in the 10x plus region for this cycle. And again, no one, and I do mean no one, has the right to complain about those kind of returns in a 3-year period. So again, I'm saying the exact same things I've been saying for weeks, aren't I? I'm saying we're 2 weekly cycles away from the 4-year cycle low. I'm saying that there is a small chance here that this is just a rollover and we're just going to do this, okay? And then the rest of this yellow squiggle will play out. The reason I don't think this is the most likely outcome here is because it seems weird to me that the stock market, gold, all of these crypto stocks, the gold mining stocks, they can all go completely vertical, okay? It seems weird that they would and Bitcoin wouldn't. But then again, it would be the most institutional thing ever, wouldn't it? If the Bitcoiners in this space had cheered on the arrival of institutions, only for them to just have this kind of random cakewalk on the way up, a sneaky distribution top, and then a quiet rollover into the 4-year cycle low with no blow off top, all the while every other TradFi asset goes vertical. That would be like the giant middle finger. And I forget who it was. Was it Warren Buffett that said Wall Street will tame Bitcoin? Well, in this context, okay, I think he would have been right. Now, again, I kind of think given how vertical the stocks are going, given how vertical gold's going, and a bunch of these stocks we've been trading, like the crypto miners and the metal miners in the level 3 member section, I mean, all of those are so vertical of late that it seems crazy to me that Bitcoin doesn't have one final push to highs left in it. And thus I'm still cheering on this yellow squiggle is my base case. Now, as I've said a million times, I don't care if it's from here, okay, or from here like I expected it to be. But any day now, we are going to confirm we got a weekly cycle low in place. We are going to start to push higher. And then so long as we can get to new highs, we can tick this one off and say, yep, this is normal 4-year cycle stuff. We've been on the right side of the trade. It's time to take profit once this thing tops. And of course, where we have to start to be more cautious and defensive is if we get this kind of lackluster rollover bounce here, something like this, okay, then it'll be time to really start to get some chips out of the way, get some profits locked down, and start to get sidelined ready for hunting down that 4-year cycle low. In either case, okay, I expect the majority of the market to kind of mock and jeer at the idea that we're taking profits very soon here. I think most of them are going to be pounding their fists on the table and screaming we're early, it's a 5-year cycle. I don't care what the narrative is, okay? Again, it goes back to this. I don't care what's going on around. Cycles are in control, everything else is narrative. Anyone that has been following me for any length of time at all has seen me say this the entire time I've had the channel, and it's always correct, okay? Nothing matters because the cycles are indeed in control, and the people that challenge that the most always are just simply uneducated. They haven't taken the time to go and learn the rules. They haven't watched the tutorial playlist. They haven't bought the PDF or whatever it is. And anyone that has done that, okay, notice how none of those people are like, oh, Camel, I watched the tutorial. I went on the indicator website, went through the educational material. Oh, I got the PDF and I read it and I still think it's BS. You notice how that never exists. Anyone ever seen that? No, they haven't. Okay, so anyway, yellow squiggle until invalidated. An invalidation would be a distributive type rollover here to a lower high. In either case, we're getting ready to take profits sometime around the Christmas time frame, let's say plus or minus a few weeks. And take a look at this, okay? So is this normal? Of course not, okay? It's because we're in a blow off top, because we're about to top for the 4-year cycle, and then next year is going to be a world of pain for pretty much everyone apart from the Camel Crew and the cycle traders. So I'm your boy Camel. Welcome to the week, welcome to Monday, and until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel